Good morning and welcome. Daily earnings season special and a couple of big ones to run through with you today. Coming up, today's earnings releases come from Microsoft, Facebook, Boeing and McDonald's, so big hitters, and Tesla. So we're going to look at Tesla today as our main focus, and also recap what happened with Apple last night. So Apple delivered a very strong earnings performance in the first quarter. So we'll go into that in a moment, but Tesla coming up. This is obviously a key quarter. We've seen the stock rally very significantly post the surprise Q3 profit that was reported in October. The stock's up actually about threefold from its lows around May last year, up from around 176 dollars, is now trading just short of $600. So big rally for the stock. Q3 numbers were good, better than expected, although there was some revenues were a bit short of expectations, but the surprise profit and the sort of upbeat forecasts were key. Coming up for Q4, Tesla really does need to deliver, just because we've had such a ramp up in the stock. There's been a lot of short covering that's exacerbated the rally. So coming up, we think revenues coming in at $7.05 billion. Be a slight fall from last year, and adjusted earnings per share coming in at $1.74 versus $1.93 last year. Bearing in mind, deliveries have hit a record high in the last year. They said fourth quarter Tesla delivered 112,000 vehicles globally. That allowed them to top expectations, although it was still meant that deliveries were in the range at which they'd guided at the start of the year. And if we recall that range of 360 to 400,000 implied flat to negative growth from the H2 run rate of 2018. So effectively, deliveries are slowing down, which is for bears something to cling to, but the excitement really lies on profitability, the idea that Chinese growth is going to come through. They're ramping production in China. Threat of the coronavirus on the Shanghai plant we need to look at. We'll be closely watching that. Apple's saying last night that they're monitoring the situation and offered quite wide guidance for the coming quarter, because they just don't know what's going to happen in China. I think we have also, of course, some positive developments in terms of just the demand side. Just looks like consumers are buying into the brand again, so that is a positive for Tesla. Of course, in the last sort of quarter or so, they've cut costs quite drastically, and that was a big worry, that they were really in rushing out the Model 3s at the tail end of 2018. They were incurring quite large costs, but they have seemed to have got control of that, and that's quite an important step forward, I think. And they do now have, I think you would consider, economies of scale that will allow them to ramp production going forward. When we look at Wedbush Securities, that's Dan Ives, one of the key analysts there. He's noted that Tesla shares remain on a historic rally heading into the earnings, and the bull party is likely going to continue because of aggressive trajectory of Giga 3 production and demand out of Shanghai looking strong. So they raised their price target just ahead of the earnings to $550. We've seen a number of analysts raising price targets, but that's partly, I think, just playing catch up, so that their price targets don't look so completely out of line of where the stock's actually trading. UBS, for example, raised its price target and maintained a sell rating. They believe, so Dan Ives, Wedbush, he believes the China opportunity is worth at least $100 per share, $300 in the bull case scenario. So the Wedbush bull case scenario for Tesla is $900 per share. And they think that European Model 3 demand, which looks healthy from pent-up demand perspective through at least the next 3 to 4 quarters. They're also saying US demand remains a major variable, gauging Model 3 consumer success, and high margin upgrades for 2020 will be a key focus. So China and Europe may be looking solid, US not so sure. looking positive for Tesla heading into the earnings, but they do need to deliver. Otherwise, this massive ramp in the stock could come unwound. The company is trading at massive multiples now. That implies growth to sort of through to 2024. That would imply deliveries of about 1.6 million vehicles. So they need to enjoy considerable sales performance success over the next few years in order to match that, which is not a certainty. If we just head to Apple, those Tesla earnings report there after the close tonight. So the session today will be a key one, whether or not to get in or out, short or long on Tesla ahead of those earnings, whatever you think they might be doing. Apple last night beat on top and bottom line massively. They were, if I can get the figures, 91.8 billion revenues, record breaking, 9% higher than a year ago, well ahead of even the most bullish analyst forecasts. EPS at $4.99 against about $4.50 expected, which was up 19%. They've returned to growth in Greater China. iPhone sales were up 8%. Wearables were up 44%, services up 17%, although that is a slower run rate than we've seen. It was up at above 20% growth a year ago. That came down to 18% last year, now at 17%. Some concerns maybe that services growth is slowing, but when you've got iPhone sales jumping again, it's less of a concern, and that ecosystem is key. They now have 1.5 billion devices in the ecosystem. So that combined with the rollout of new services like Apple TV and the credit card all make this a very strong, positive company story for the company over the last couple of quarters. Justifies the multiples, you would think. We have seen that massive increase in multiples over the last year, but that earnings have more than caught up with that, I would suggest. And now we need to look at the 5G story and whether or not we get that super cycle coming in the autumn, with whether or not Apple does manage to get its 5G devices out the door, or its key devices, that is, this year, or whether or not we're waiting to 2021. But shares were up after hours, off the back of these numbers, and you would think it's very hard to make a bearish case right now, except on valuations. So that's it for the moment. We will be back later on for Walk on Wall Street. Thanks for watching.